Today I wanted to discuss the current state of the US economy and the US stock market, driven by all of this uncertainty that's being caused by the Trump administration. So here's what's on the agenda. Firstly, we're going to talk about the latest position on tariffs. Secondly, we're going to talk about the potential impact on the economy. Thirdly, we're going to look at the current state of the stock market and its current position. And then fourth and finally, I want to look at some historical data on market downturns. But before we get this video started, guys, this video is for educational and journalistic purposes only and should not be construed as financial advice. Nothing that I say in this video is an investment recommendation, and when you are investing, your capital is at risk. So first off, let's talk tariffs. Now, I did make a video on this last week, which I'll leave a link to down in the description below. But for those of you guys who did miss it, well, I'll give you guys a quick overview of what the current state of play is in this kind of quickly evolving situation. So first up, Trump came into office and announced tariffs on countries like Canada, Mexico, and China, being the three biggest importers of US goods, where Trump plans to make the prices of these imports much more expensive and less attractive on things like timber, medicine, semiconductors, energy, and so much more. Thereafter, Trump then started placing blanket tariffs on all countries importing specific goods. But the two that are making particular headlines in the press is aluminum, as Trump calls it, and steel. Now, there's been some broader concerns from CEOs and business owners over in the United States, with surprisingly Donald Trump's right-hand man Elon Musk's Tesla actually sending a letter into the White House addressing some of these concerns that they actually have. And that was just literally days after Trump's been stood outside the White House with a Tesla in support of Elon Musk. But back to our timeline, some of these countries then started to retaliate with counter tariffs being put in place. Europe threatened a 50% tariffs on US whiskey, which I'm sure probably annoyed Trump's pal Dana White with his Howlerhead whiskey brand. Trump responded to this with threatening Europe with placing 200% tariffs on all alcohol. But Trump doesn't seem fazed, and actually the latest reports suggest that Trump's going to look to implement more reciprocal and sectoral tariffs on the 2nd of April. So that's roughly where we're at the time of recording. As I said, it's an evolving situation which is literally changing day by day. But ultimately, it is resulting in a bit of a global trade war. Now, you might be wondering, well, why on earth is Trump doing this and causing all of these issues? The first one is because of economic reasons. Trump believes that tariffs will boost the US economy, it will boost US employment, it will increase tax revenues and grow the domestic economy too. And obviously, Trump's looking to incentivize businesses to operate in the United States rather than looking to kind of benefit from cheaper materials and cheaper labor that they can get overseas. The second reason he's implementing tariffs is to increase the wealth of Americans.
We're going to take in hundreds of millions of dollars in tariffs, and we're going to become so rich, you're not going to know where to spend all that money, I'm telling you.
There's been lots of reporting on this, and it says that Trump actually is looking to abolish the IRS, which essentially is just like the US's version of HMRC. And essentially, he wants to replace the IRS with a tariffs-based revenue system. This means he could potentially look to abolish any income tax being owed from people who are earning under $150,000 a year. On the surface of things, I guess that sounds great. If you're a US citizen, you're thinking, well, China, Canada, and Mexico can pay my income tax revenues, and I can keep more of my hard-earned US dollars. But the bigger issue here, and one of the problems with implementing these kind of tariffs, is that, as economists are worried about right now, is the potential threat of a US recession. And that's as a result of all of the disruption that's going to take place and lots of other things which we're going to touch upon a little bit later in this video. So is it a question of Trump just detoxing the economy, or is it a case of him poisoning the economy instead? Well, I'll let you leave your thoughts down in the comment section below, but here are what some of the economists are looking out for when it comes to economic data. One of the first signs of a recession is a reduction in consumer spending. With fewer people spending money, businesses are earning less money, and that has a negative knock-on effect on employment, output, and all of that kind of stuff. And for now, retail sales in America are actually okay. They were below forecasts of 0.6%, and did come in at 0.2%, but they're still very much positive for the month of February. And admittedly, you will always get a little bit of seasonality, especially in Q1 after the kind of Christmas period that's just taken place, where consumer spending may decline a little bit after such an expensive period. However, one indicator that could very much result in a prolonged period of consumer spending weakness actually comes from a report from, or a survey, actually a consumer sentiment survey from the University of Michigan, which actually shows that consumers are increasingly becoming worried about both short-term and long-term inflation, and the state of labour markets too. The inflation story is a little bit prominent here. Naturally, you would think with tariffs coming into place, then that would cause inflationary pressures. However, as of right now, the current inflation rate, core CPI over in the United States, is a little bit high at 3.1%, but it has been progressively declining since like March 2022. But an economic outlook report published by Morningstar just a couple of weeks ago actually shows the inflationary outlook for 2025 will be 2.2%. So this drastic change in consumer sentiment and things that they're worried about could be a little bit of a knee-jerk reaction to probably all the headlines in the press, because of some of these unconventional economic policies that the Trump administration are putting in place. But for now, we can only wait and see how this economic policy translates into economic data and what that performance looks like in the coming months ahead. However, what could potentially justify some of those concerns that consumers have around the job market is from data which actually came out this morning from the Organization of Economic Cooperation and Development, who have forecasted a slowdown not just for the United States, where growth is actually projected to decline to 2.2% in 2025, which is down from its prior forecast of 2.4%. But they're also forecasting that global economic growth will also decline to 3.1% from the 3.3% which was previously forecasted. And that's as a result of all of these tariffs and trade war stuff that's kind of taking place currently. So it's not like a total disaster, like the numbers are still positive on the whole, as we can see. It's just an adjustment, I guess we could say, to a fairly sharp change in economic policy. What is interesting, though, is that Morningstar actually have written in their report that they think the probability that these tariffs are implemented and maintained for a multi-year period is actually low. Essentially, this could just be Trump's big bargaining chip in order to get some better global trade deals. I guess it's how any negotiation starts. If you go in high, at least you know you can come down just a little bit. I will caveat that by saying that that's providing you haven't completely insulted the other party, where they just don't want to do business with you whatsoever, which I guess is an added variable here to this economic debate, which is open to discussion. However, I do think Morningstar have explained the potential economic impact, and they've summarized quite a lot of what we've said during this video pretty well, so I'm going to read directly from the report on their little bit of summary analysis, which says that higher tariffs would unambiguously reduce real GDP. The degree to which they also affect inflation and other macroeconomic variables is contingent on the fiscal and monetary policy response. For example, if the proceeds from tariffs are used for tax cuts, the tariffs would be more inflationary, or they would lead to higher interest rates, owing the Fed's response to inflationary pressures. On the flip side, exchange rate appreciation would dent the inflationary impact on tariffs, at the cost of harming US exporters. I will leave a link to this full report down in the description below if you would like to check it out. It covers all different aspects of the economy and the future outlook, which is super interesting if you want to understand all of this stuff in a little bit more detail. So now let's discuss how this could potentially impact on the stock market. Well, as it recorded, the US stock market is still teetering around that market correction territory. Now, market correction is defined as a decline in market prices of 10% or more from its previous high. But particularly, big tech has also taken a hit too, with the Mag 7 all being down fairly heavily since the stock market highs back on the 19th of February. So it's not a great time for investors who are exposed to the US stock market. But then again, Trump doesn't seem all too fazed by that either.
What I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that.
I think Trump generally does have a point here. From like a personal perspective, I can get all too caught up in looking at the headlines in the press. I can get all too caught up with checking my investment portfolio sometimes multiple times a day and how my investments are performing in the short term. But the reality is my investing time horizon is like 20 plus years, so I probably shouldn't be all too bothered about what's going on today and this week and perhaps even next month. I do think it is important to try and retain that perspective, especially when things aren't going too well. But here is what the US Treasury Secretary had to say about this current volatility that we're seeing in the stock market with an interview that he did with CNBC.
So we are focused over the medium long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
So an interesting take, but fundamentally probably isn't telling us anything we don't already know, in that good economic policy should support economic growth and the growth in asset prices too. Principally, that would be correct, but in reality, we're yet to see how all of this is going to play out, at least in the short term. It's an absolute unknown, just like the future performance of the stock market, which we're going to discuss next. Look, let me start off this segment by saying nobody knows what's going to happen in the stock market. Next week, next month, next year, in 5 years' time, 10 years' time, nobody can predict what's going to happen. However, I did just want to share some perspective based on past market data because I think that's sometimes important to look at. So let's dive into a report which was published by Fidelity. It says since the 1980s, the S&P 500 has declined by 5% or more on 93% of calendar years, and 10% or more on 47% of those years. Although we now can add 2025 to that list of 10% drops or more, since we did experience that at the back end of last week. Now, even though the US stock market has just lost trillions and trillions of dollars of market value, the US Treasury Secretary still says that market corrections are actually healthy. And whilst that might not be healthy for our mental health or the state of our stock market portfolios, in reality, he's probably right. Because in reality, it would be simply unsustainable for markets just to go up in straight lines. Because that's just not really how the world operates. Because the world can be a volatile place to be, with economic and geopolitical uncertainty just being the buzzwords that you see in the headlines. And in actual fact, are largely just the tip of the iceberg. There's so much other stuff that we could unpack regarding all of these things, but we'd have to sit here for hours and hours discussing and debating them. So instead, I thought it would be easier just to show a chart of the fluctuating market returns that have been on the table since the 1980s. What you can see in dark green is the biggest rally, in red is the biggest drop in value, and also the annual returns in bright green, in percentage terms for the S&P 500 since the 80s. And hopefully that gives some perspective on just how much the market can shift on any given year and intra-year as well. Of course, past performance isn't indicative of future results, and you can kind of see that with the past performance in the market being fairly random. So whilst averages can just be used as a guide, actually it doesn't tell us anything about what's going to happen in terms of the market over the course of 2025, or how much they're going to fluctuate both positively or negatively. But one of the reasons not to panic right now, regardless of whether you agree or disagree with Trump's tariffs and his economic policies, is because when we zoom out, these kind of economic issues, if you like, happen all the time. And actually, it goes beyond that of just economic issues. From world wars to financial crisis to Brexit to pandemics, we've been through many historical worldwide impacting events before, which at the time probably no doubt felt like the worst thing that you could experience as an investor. But at least historically speaking, markets have always recovered, which I think is an important perspective to retain, especially when things aren't going in one's favour. So if you do have that perspective, be sure to subscribe to the channel for more videos, and whilst you're over here, YouTube thinks that you should check out this video next. That being said, I'll see you over in the next one.